The World Bank has reduced its economic growth forecast for Sub-Saharan Africa for this year and 2016. The bank notes several challenges for African economies to tackle, including Ebola, slower global growth, and lower commodity prices. But the World Bank says there are several reasons for optimism as well. CCTV's Daniel Ryntjes reports.
The World Bank has slightly downgraded sub-Saharan growth forecasts at 4.6% this year and 4.9% next. Behind the numbers is an outlook often pulling in two directions. Nigeria's a good case in point, suffering from falling oil prices and foreign investment risk aversion. Not helped by the worsening security problems with the militant group Boko Haram. But Nigeria's also successfully diversified its economy away from fossil fuels, helping to maintain growth above 5%.
So you have external challenges, you have domestic challenges. At the same time, it's a brand new year. Our hope is that policymakers in the region pay attention to the necessary steps they need to take, and they will take those.
The World Bank says investments in infrastructure and services are key drivers for African growth now. But that too could be a problem if countries are relying too heavily on financing their projects through debt.
Interest rates are going to gradually increase, slowly, gradually increase. When they start increasing, we will see, in a sense, which countries are ready, which countries are not ready. And this is a good time to get ready for the change.
Investments in agriculture are another upside, though in West Africa that could be threatened by the spread of the virus Ebola to cities and major transport hubs, though the World Bank is hopeful that this will be avoided.
The bottom line is that I think the future of Africa is quite bright. Today, the Africa needs to show that they can withstand these external shocks, they can manage the economy well.
After a downbeat 2014, the World Bank says South Africa is showing signs of acceleration because of improving labour relations, export increases and reforms to the energy sector. So despite these downgrades, the World Bank thinks that with sound financial management, many of these countries have the capacity to withstand these challenges and the capability to unleash their massive economic potential. Daniel Ryntjes, CCTV, Washington.